Welcome, everyone. We're charting Bitcoin's course today, trying to unpack the signals, the strategies, basically figure out what's going on.
Yeah, there's a lot of noise out there, isn't there? We're focusing on Bitcoin's market position, where it might be hitting.
Exactly. And a big question lots of you have, is this bull run fizzling out, or is there more gas in the tank?
So to help navigate that, we've dug into analysis from Oliver Velez. He's a trader with, over 40 years in the markets?
That's right, a real veteran. We're looking specifically at his thoughts from his video, Is the Bitcoin Bull Run Over? And also his views on trading Bitcoin miners.
And our mission, really, is to give you a clearer picture, cut through some of the hype maybe, focus on Velez's perspective on Bitcoin's path, trading versus holding.
And also those psychological bits, the market sentiment stuff that can signal big shifts. We want to equip you, not, drown you in data.
Okay, so let's tackle that main question head on. Is the bull run over, according to Velez?
His answer seems pretty clear, doesn't it?
Yeah, it's a firm no. He strongly believes what we're seeing now is what he calls a historical pause.
A pause, not the end.
Right, within the usual 4-year Bitcoin cycle.
Huh.
He doesn't think the party's over yet.
And he actually thinks 2025 could be, well, pretty significant.
He does. He suggested it has the potential to be the most dynamic year of this cycle, like where the major action happens.
And that's based on historical patterns?
Mostly, yeah. Bitcoin tends to run for about 3 years, then has a bear market year. He did note that the 2020 cycle was a bit different, an exception.
But he doesn't think this time will be like 2020.
No, and he lays out quite a few reasons why. Things are different now. You've got way more institutional adoption, for one. Those spot Bitcoin ETFs, that's huge for accessibility.
Right, opens the door for more traditional investors.
Exactly. Then there are favorable accounting changes, like FASB, making it easier for companies to hold Bitcoin.
Okay.
Plus, you're seeing pension funds starting to dip their toes in, nation-states getting involved in mining and policy.
Wow, okay. So a lot more big players involved this time around.
And even talk, he mentions, of a potential U.S. Bitcoin strategic reserve. It's a different landscape.
So it sounds like the underlying structure is just stronger, more established.
That seems to be his argument. He figures, look, Bitcoin was already a top performer before all this serious institutional and government interest.
All right.
So now, with all these new factors, he sees significant upside potential still left in this cycle.
Before the eventual peak.
Yeah, which he thinks might come, say, late 2025, and then that would likely lead into the next bear market, maybe starting in 2026.
Okay, that paints a picture of continued optimism, at least for a while longer. Now, how does he see Bitcoin stacking up against, say, gold?
The gold comparison. He's pretty blunt about it. He basically calls gold a vast underperformer, especially when you look at longer time frames compared to other assets.
Like stocks.
Yeah, like the NASDAQ, the S&P 500, and especially compared to Bitcoin. He thinks gold just hasn't kept up.
And Bitcoin itself, he puts it somewhere else entirely.
Pretty much. He says it's in a different category, even a different species, like you almost can't compare them directly.
That's a strong statement. So gold is the past, Bitcoin is the future, in his view.
That's the gist. He talks about this pattern where gold, the sort of analog store of value, moves first.
Okay.
But then it kind of passes the baton to Bitcoin, which he sees as a future store of value. And once Bitcoin gets going,
it leaves gold in the dust.
Significantly outperforms whatever initial gains gold made. That's his take.
Interesting. So for long-term growth, he's clearly betting on Bitcoin over gold. Let's talk strategy then. For someone listening, what's his advice? Trade it. Hold it.
He's very, very clear on this. His recommendation is pretty much get in now.
Just jump in.
Get in now, and maybe even more crucially, stay in. He's emphasizing the long game here.
So not really about timing the dips and peaks for short-term gains?
No, not primarily. He frames Bitcoin as the future, a potential road to financial freedom, and sees holding it long-term as the key.
And coming from someone with, 44 years in the markets, that carries some weight.
Definitely. He calls Bitcoin a unique, asymmetric bet.
Okay, asymmetric bet, meaning the potential upside is way bigger than the downside.
Exactly. Given his long-term bullish view, he sees the potential reward as massively outweighing the potential risk, especially from current levels.
He even mentioned that famous Bitcoin phrase, don't trust, verify.
Yeah, but he adds a little personal twist. He kind of says, look, if you can't verify it all yourself right now.
Maybe trust his experience for a bit.
Sort of. He suggests leaning on his decades of experience as a starting point, at least until you can do your own deep verification. It shows his confidence, I guess.
It certainly does. He feels the market since 2019, 2020 has backed up his earlier calls.
Okay, what about Bitcoin miners then? Is he bullish on those too?
Interestingly, no, not in the same way. He says he's not a mega bull on Bitcoin miners.
Oh, so separate from Bitcoin itself.
Yeah, he sees them very differently. More as a cyclical plays. Cyclical plays, meaning good for certain times, but not forever.
Exactly that. Good trading opportunities, perhaps, when Bitcoin is really running hot during the bullish phases.
But not a buy and hold forever type of investment.
No, he doesn't seem to think so. He points out that historically, these mining companies often don't sustain those really huge gains over the long haul.
Why is that, do you think? Is it tied to the Bitcoin price?
Partly, yeah. Their profitability is obviously linked to the price, but also he mentions the mining difficulty,
Right. That increases every 4 years or so.
making it harder and potentially more expensive to mine each Bitcoin. So their long-term growth isn't as certain as just holding Bitcoin itself, in his view.
So maybe less predictable long term?
Could be. He even suggests miners could be used tactically, like as a hedge.
A hedge? How so?
Well, during a bear market, you could potentially short the miners while still holding your Bitcoin long. The idea is the miners might fall harder or faster than Bitcoin itself.
Okay, so using them strategically rather than as a core holding.
That seems to be his perspective. He's quite firm. There is no better long-term play than Bitcoin, period.
Nothing else in crypto beats it long term.
That's what he implies. He even lumps MicroStrategy into that cyclical play bucket.
Even MicroStrategy. Wow. Despite all their Bitcoin holdings.
Yeah, still not the ultimate long-term hold compared to just holding Bitcoin directly, according to him.
That really underscores his conviction in Bitcoin itself. Okay, now, you mentioned he talked about a potential market drop or crash before. What's his thinking there now?
Right, in a previous session, he had warned about a possible crash maybe in 2025. He still anticipates a drop, maybe a scary drop, he called it.
Scary sounds bad. End of the bull run.
Not in his view. That's the crucial part. He thinks that drop will get gobbled up pretty quickly by buyers.
So, a buying opportunity.
More than that, he sees it as the setup for the next massive leg up.
So the drop shakes people out, then the real move happens.
That's the idea. He expects that drop to lead into a mega run to the upside, hitting new all-time highs. He used the word ferocious.
Ferocious.
Okay.
And likely to catch people off guard.
Yeah, surprising most people. And that subsequent huge surge, that's what he thinks sets up the mega one.
The ultimate top of this cycle.
That seems to be his framework. And he adds a warning.
Uh-oh.
For anyone who gets super bearish on that initial drop and, like, doubles down on shorts.
They could get wiped out.
He says they'll likely be obliterated by the massive bull surge he expects to follow.
Sounds like classic market volatility, designed to shake everyone out.
Pretty much. He even used that old saying, you know, the market eventually kills everybody, the extreme bears and the extreme bulls.
Right. Stay flexible. Don't get too dogmatic either way.
That seems to be the lesson. So, given all this talk of tops and potential bear markets, how does Valez suggest you actually know when a real bear market is starting? What are the signs?
Good question. Is it just a feeling or specific signals?
He leans heavily on technical analysis for this. He thinks it's clearer than relying only on fundamentals, which can sometimes signal too early or be too broad.
Okay, so watching the charts, the price action.
Yeah, he mentioned using concepts like space, dual space, time, and distance from key moving averages.
So how far price moves away from its average and for how long?
Basically, yeah.
Yeah.
Big deviations are potential warnings.
Yeah.
But, crucially, they need to be confirmed by what he calls mega bearish events.
Like actual bad news or major negative catalysts?
Exactly. It's not just the chart pattern. It needs a real-world trigger, too.
So it's about identifying the start, not just predicting it way in advance.
Right. And then he adds this really interesting psychological layer.
Which is?
He believes a true, prolonged bear market typically only begins when almost everyone is long, when pretty much everyone is bullish and fully invested.
Why is that?
Well, think about it. If almost everyone is already in and bullish, who's left to buy when things turn down?
Right. There's no sideline money to absorb the selling.
Precisely. He uses this analogy of a packed theater. Everyone's inside, enjoying the bull market movie. Then someone yells, "Fire!" That's the mega bearish event. Everyone rushes for the exit door selling.
But the door liquidity is too small for everyone at once.
Exactly. So you get a panic, a prolonged downturn because the selling overwhelms the available buyers.
Whereas if the theater isn't packed, if lots of people are still outside, still bearish.
Then a drop is more likely to be bought up, right? There are
Yeah.
people waiting to get in. It's that climbing a wall of worry idea.
So paradoxically, all the current talk and warnings about a bear market might actually mean it's not right around the corner.
That's kind of the implication of his thinking. If everyone's worried about it, it means not everyone is blindly bullish and fully invested yet.
You need that extreme widespread optimism first.
Yeah, that state where almost everyone thinks it can only go up.
Yeah.
That's the environment, he suggests, that's truly vulnerable to a major sustained bear market.
Fascinating stuff. Okay, let's try and pull the key threads together here for everyone listening. What are the main takeaways from Velez?
Okay, first big one. He's definitely not calling the end of the bull run yet. He sees this as a pause, with 2025 potentially being a very strong year.
Right, the pause before potentially another big move up.
Second, Bitcoin versus gold. He sees Bitcoin in a completely different league long term. Way more potential.
Got it. And strategy-wise?
His strong advice is long-term holding for Bitcoin itself. Get in, stay in. Miners, on the other hand, are more like tactical, cyclical trades or hedges.
Not core long-term holds like Bitcoin.
Correct. Then there's the potential for that scary drop.
Which he sees not as the end, but maybe the setup for a huge, ferocious rally to new highs.
Exactly. And finally, identifying the real start of a bear market. Look for technical confirmation plus that crucial psychological sign, near universal bullishness.
When almost everyone is already in the theater.
You got it. That's the danger zone.
So overall, despite the volatility, Velez maintains a really strong long-term conviction in Bitcoin.
He absolutely does. Sees it as a uniquely powerful asset for the future.
Okay. Well, that gives us a lot to think about. And maybe here's a final thought for you, the listener, based on all this. Velez puts so much weight on market psychology. What subtle signs are you seeing out there right now? In the forums, on social media, in the news? Does sentiment feel like it's approaching that extreme bullishness Velez warns about? Or is there still plenty of caution?
Something to definitely keep an eye on.
Indeed. Until next time, keep charting your own course.